and let's take it from there. And please do answer. Don't be let's not make this a monologue. It would be great to have your thoughts and your interactions and what you think on I am here today to just give you sort of really an idea what real estate as an asset class is. I'm not here to talk about real estate development or real estate really around or why real estate. No, none of that. I just want to give you an sense, an idea, an understanding of what this can become, how this is looked at around the world, and why it is important in the way it is important. um, it's just to open your avenues up to a different world, which you can lead up to once, because you're all urban planning students. You do understand a space, you do understand place, you understand urban dynamics. So when it comes to real estate, it's more about understanding it as an investment, understanding it as an asset class. So my only aim today is to sort of make an introduction of why it means to the world, what it means to the world of finance, people socially across the world, and obviously as an asset itself. So let's get started. Um, I would like to ask you guys a question. Anybody? So what is real estate? Let's start there, yeah. And if anybody can remember this very, very iconic movie poster. Can anybody? Anybody knows who that is? Which movie that is? Come on, guys. None of you? No? Okay, I'll give you guys a minute or so to think about it. Think about it. Still no answer. Please tell me somebody knows about this. Scarlett O'Hara? No? The
No, ma'am, we
magnum
don't.
opus of the West? Really?
Gone with the
Okay.
wind. Gone with the
Oh,
wind.
wonderful. Somebody knows it. Fantastic. Thank you very much. Yes, it is Gone with the Wind. So, Gone with the Wind, the magnus opus it is, yes, but gives you a very deep insight on really what real estate as an asset class means. And if you remember the movie, it's an old classic. If you haven't seen it, please rent a DVD, go to Netflix, go to Amazon Prime, wherever you can find it, please watch it. Yes, it is made 40s, 50s, but it is set the world is 18th century America. And it opens with the iconic which say, the land is the only thing in the world worth working for, worth fighting for, worth dying for, because it's the only thing that lasts. And this was Scarlett O'Hara's father who tells her this. And I think this sums up the definition of real estate. So what it is trying to say here is, think of it physically. Yes, it's a tangible physical asset. You can touch it, you can feel it, you can see what it is. Unlike shares or bonds, you don't know, they just exist in paper form. So it is physical asset, which is like this is the only thing that lasts because it's a physical piece of thing. You can plow it, you can get your financial independence out of this, you can rent it, you can do a lot of this. And then socially, it's worth fighting for. It's worth because it gives you work. Everything can come out of land. You can raise cattle, you could plow the fields, and you could make a decent living. So I think this quote generally to me signifies everything that real estate means. And when it says worth fighting for, all it's trying to say is it is asset owned over centuries where men actually have fought for. And the only reason they have fought for this is so that their families could have a livelihood, so that there could be some sense of security that they could fall back on. And this has not been true today. This has been true from times immemorial. So just give it a thought. Give it a second and think about this quote, because for me, rather than giving you three book definitions of real estate socially this and financially that, just try and give this a thought and imbibe this quote from the great Gerald O'Hara from Gone with the Wind. And this is the statement the movie it opens with, and this is the reason most of us today exist, because there were enough people who fought for it, worked for it, died for it. Anyway, moving on from the dramatic. Um, as I said, all I wanted to do was give you sort of an idea of what real estate actually means as an asset class. And when I say what it means is investments and assets are primarily understood in two different ways. So there are the real ones, which is physical assets, which is literally real estate and commodities. Now, commodities also have, and when I say commodities, I mean metals, primarily like gold and silver and platinum and things like that, but also oil and gas. They also fall into the commodities part. However, commodities are a little more complicated because they now, in today's world with lovely financial instruments, they are covered under the garb of derivatives, and a lot of derivatives have an underlying asset called gold or oil or gas or one of those. So that's but commodities still fall sort of in the real part of the real side of assets, which is basically the real assets, because of the underlying asset itself. So obviously the physical would have the real estate and the commodities, and virtual, as you may understand, because you really can't see them, are your bonds, equities, swaps, options, derivatives. Now don't get too scared. None of this makes sense to a urban planning graduate. It didn't make sense to me when I went on to do my masters in finance. But you will slowly, as you develop a sense and understanding of investments and money in life, you obviously, as they say, don't keep all your eggs in one basket. So one invests differently, some in virtual, some in real. But today I'm here to talk about what they are and how real estate is different. So let's move on from there. Right. So as you can see, they all obviously have their um, share of um, pros and cons. Um, and when I say real, I am primarily talking about real estate here. And when I say virtual, I'm talking about all the rest. I'm not talking about commodities because it's a completely separate topic on its own, because it's sort of an hybrid asset that sits between both. So looking at let's start with the virtual assets because they're easier to understand. So when I talk about the virtual assets, as I mentioned, the shares and the bonds, uh, the pros being they have fairly low entry point. That means even if you have like $100 or £100 or 500 rupees or 1,000 rupees, you can start investing in them. Because the initial entry barrier is extremely low. You can actually buy like 10 shares in 1,000 rupees that you may have. Whereas that's not the case for real estate. You can't buy anything in 1,000 rupees. Um, so that's one good part. The other part is liquidity. And when I say liquidity, what I mean is you can go take them tomorrow and liquefy whatever assets you have logged in at whatever value they may be. So you borrow shares for 1,000 rupees, they became 1,500 tomorrow, you can encash them. Or if they became 900, you can encash them instantly. So there is that whole liquidity aspect to it. Then there is no physical input so to require so as required when you talk about owning the virtual ones, because they are effectively a piece of paper. So it's not like you have to buy and take care of it and or plow it or do anything with it to be able to start making your income. So that's one thing. Instant valuations is another. So you can value these extremely instantly. You can actually go on FTSE or you can go on Reuters, Bloomberg, and you'll get the price of your shares, Amazon shares, Facebook shares instantly. So values are changing throughout the day while the share market is working, and 24 hours, because some or the other share market in another part of the world is working. So that's one good part. You get a lot of tax breaks, yes, but that's also a con in them, which I will explain when I talk about the cons that you have. And they can be extremely short-term investments if you want to make a quick buck, get out of it, and that could be a great part about it. The cons being they are paper money. That's not real money. So as I said, you when you own a share, you own only a part of Amazon. You become a part of Amazon or Google or whatever you may have bought Shell or any other company. But the thing about that is you never ever actually end up physically seeing your asset. So you have like a 0.01% share in it, but can you actually see that share in money form? No, not really. So that is an issue. You do not have any control on it because the decisions about these shares, the business decisions are actually being made by people, board of directors or CEOs who are far away, sitting in some corner of the world, and you have no control on it. So their bad decisions influence your investments. Yes, the easy valuation, the instant valuation part is sort of a con as well. Because it fluctuates so much in the day, you can never really estimate. You can never have a real value, even if you draw all the mathematical options of driving a mode, getting like a median value of any of these. You really never end up getting a ballpark value for these because it goes through so many valuations during the day. Obviously, that will make far more sense when I talk about regression models and things like that, which perhaps is not the requirement at the minute. But if you do wish to talk about those or have further questions, feel free to write to me and I'll be happy to answer those. So when you actually build investment models, and when I say model, they are not out of styrofoam, they are built in Excel in another world, not in the architectural world, so to speak. But yeah, so they give you these results, which are effectively numbers, which talk about them. Again, on the sort of extending from the same point of valuation, they are extremely sensitive to external impact. And what I mean by that is a news during the day can make or break the value of a share. So if a coal mine or an oil drill catches fire in Saudi Arabia, oil prices shoot up. So it doesn't mean suddenly the supply has gone down. The oil in the world has suddenly come to a point where we are starting to pay 10 pounds a barrel on top of what we're already paying. However, any sort of a change in government, speculation on policies, things which are completely out of your control and so external and remote from your um, from your own, things from that are under your own control, impact, and they may be real or not. The government may have one or may have such policies, but it may not implement it. So, but however, that still has an impact on the valuations. The other part of that extends to taxation laws. Yes, you get a lot of tax breaks when it comes to um, virtual assets like shares and bonds. However, the taxation laws around them are so complicated that you actually end up hiring people to be able to help you save tax, which in turn actually and just goes in their fees. So that is another deterrent when it comes to really understanding what you finally make out of the sum that you have invested. Uh, as I said, this whole idea of having a short-term investment um, goes both ways in this case because yes, you can go in and come out quite quickly, but you should know when to come out. Short term is a very relative term. For me, short term could be 3 months. For somebody, it could be 2 years. So one needs to think about that. So moving on. Please feel free to send your questions again as I'm mentioned earlier, because I know some of these things might not be things that you study on a regular basis or might not have given thought to, but it is it would be a good idea to make this interactive, as I said. So yeah, just moving on from there. Again, sort of understanding now real estate as a part of this, understanding it as an asset class. Um, Essentially, it is tangible. That's its first pro. Um, there's nothing like land. You can touch it, you can feel it. When you own real estate, a piece of small flat house, it's bricks and mortar. It's reason it's called bricks and mortar. So you know what you're paying for. You touch it, you feel it. That's what it is. It's an instant income. If you own land, you can start plowing it. If you have a house, you can rent it. It comes quickly. So whereas when you buy a share of bond, you're not making an income on it on a daily basis or monthly basis. It just sits there. Um, Apart from that, tax, I don't know if a lot of you know this, there's a stamp duty you pay when you buy a house or a flat or any kind of investment in India or abroad anywhere. Now, if you then, say, for example, sold a house and then wanted to buy a bigger house, you're exempt from stamp duty. So you get extremely large tax breaks. And they're quite straightforward in law. You really don't have to hire a lawyer or a tax expert to be able to calculate any of these. Now, when I say insider trading as a pro, what I mean is knowing an area is going to develop, a land use pattern is going to change, and you buy a land there, and tomorrow it was agriculture and becomes commercial use. It doubles, triples, or even 10 times increases the value of your land. Now, this insider trading, anything that's not, so you may know of this information beforehand. Um, this virtual assets, effectively non-published information as we call it, is actually a criminal offense by law. However, in real estate, this insider information is called due diligence. Because if you know what's happening where, and if you can understand and you can speculate and think, and you can also um, have a vision of how these things will expand, which is where urban planners like yourself are at a great advantage, because you can see how things are going to develop. As they say, uh, don't wait to buy land and then wait. That's what will give you the actual money. So that helps in the case of real estate. It's a long-term investment. Yes, it very much is. Um, Nothing with real estate is short-term. So that's a good thing and a bad thing. Obviously, I list it as a pro and con, depending on it's very much relevant to how a person is looking at their investment at that particular point in time. So just looking at the cons for this, uh, entry point is extremely high. So you can't, as I said, buy land or real estate for 1,000 rupees. There is a minimum entry point of, say, 5 lakhs or 20 lakhs, or in this part of the world, a few crores. So that is that is a hindrance. You have to save up a lot for a deposit. You have to apply for loans, and have a flat, you have to rent it out in terms of do it up, or physical upkeep of things is extremely important. It's not very liquid. It takes anywhere between 3 months to a year to sell a piece of land or any other form of real estate. It has a process involved. There is no instant valuation of land available. Bad because obviously you can't always exactly know how much it is. Good in a way because you have a margin to play with. While there's a 10% margin on either side and a bell curve that allows you to negotiate, work around values. And finally, as I said, it's a long-term investment. So one needs to think about it as something that they will hold, cherish, and see and realize the value it in a few years. From my perspective, I feel I don't think I could have put it better than Mark Twain himself. Buy land as they don't because it's resource available. There is only how much ever you do, you cannot suddenly have 2,000 more apartments in the center of New York or in the center of London. Hence, and also a lot of regulation that does not allow for it. So there's always a very, very limited source available. The supply is extremely limited, unlike bonds and shares being listed. So think about these things. Think about real estate or land or anything that you design or give shape to as part of urban planners in the form of an asset, an investment class, and see how that changes dynamics of your planning. With this, I just hope I really do not want to bore you guys any further. With this seminar of mine, I just hope I've given you enough thought um, to go back with and sort of start thinking from a financial point of view. See how these factors could influence your planning. See how they have impacted existing cities like London, New York, Delhi, Bangalore, Mumbai, um, Kuala Lumpur, how the more centric cities, polycentric cities, and how that has, because of the push and pull of financial markets and investments and asset class, study the theory of economic, agglomerations. When you study real estate economics, all these things will come into picture, and that will lead you, I believe, understanding these different aspects to our physical environment, to our spatial environment, allows you to become a better urban planner. And I just hope I've given you enough thought around it today. So thank you guys. Thank you for making time. I really appreciate it. Feel free to throw questions at me, and apologies again for the late start.
Hi, Chaitali.
Hi,
Hi,
Purnima.
I'm a faculty for urban design actually. I think this question
Hi.
you must be getting this question a lot. But how did you turn to finance from architecture?
It's money, baby. No. So it's actually it was all thanks to a professor of mine. I
Okay.
think you guys all know her. It's Mrs. Rajshri Kotharkar, and I,
Yeah.
for once, didn't give much of a thought to as to. I was a good student. Namrata, if she's on the call, she can vouch for it. She'll tell you how good I was. But
Yes, yes, she was
having
excellent.
said that, she was the one who. Yeah, yes. No. I was a geek, man. I was a geek. Anyways, so what happened was on that cusp of actually finishing architecture, deciding what I wanted to do in future. There was a few questions that she posed to me, and then I thought, I mean, I don't want to, um, you know, prejudice anybody's judgment of taking the course that they are on at the minute. But she thought that I could, because sometimes, people who teach you or people who are your mothers or, your parents or your guides actually can see you better than you see yourself, and especially at the age of 21, 22, where you don't have a lot of experience of life. So she had a few questions for me, and the answers to those questions actually led me to thinking that perhaps this could be a course that I could do. And also, I thought that at that age, you are extremely idealistic, and you think you can be the bridge between the world of architecture and finance, and you can change the vocabulary. None of that happens, but at least it makes you understand your own environment, the forces that shape your life better. So for me, it was essentially a question of what am I doing next? I wanted to do something which was still connected. So I did real estate finance. I majored in real estate. So my base was finance, but I majored in real estate because that I thought was sort of a natural progression. We had done urban planning and urban design as part of our fourth year, third year, um,
Yeah.
electives that took. But it sort of, I sort of thought real estate economics and finance would enable me to understand design better or urban planning better. That was my intention.
And the real estate development with respect to India and London, like right now where you're working, how different is it? Or
So that's another chapter. It is another half an hour conversation.
yeah.
That's why I didn't put I put any of those aspects. Of course, it's very, very different abroad from what it is in India. It's highly regulated back here, and when it comes to India, the regulations are still getting formed. But I believe it's been about 5 years, if I'm not wrong, where the real estate investment regulations. I think it's I can't remember the name, but you now have a RICS equivalent body. So when I say uh, RICS equivalent, it is like a real estate investment and chartered
Yeah.
surveyors forum that has taken shape in India, which is now defining rules, just like SEBI does for companies with bonds and shares listed companies. They are defining, and I also believe I think either it is SPA or one of the very good colleges up north who are offering property valuation as a master's degree.
Okay.
So you do now have formalization of this side coming into our part of the world back in India. But here, real estate has been a very formal asset class from a very long time. So just to give you a example, has any one of you watched Downton Abbey by any chance?
Just a part of it though, not
You
just
get
the
the
whole
context. So
idea.
there is
Yeah.
I
this
have.
family which owns this
I'm
big
sorry,
estate
Chaitali,
and
I won't be
has
of
a big.
any help. I'm a senior faculty here and not a part of urban design. But then I was the one who said Gone with the Wind, and I was the one who's seen Downton Abbey the whole season. So the youngsters would know that part
Yeah.
of
So if you
cinema.
so
Yeah.
if you know what I'm talking about, the family owns this estate, Downton Estate, and
Yes.
towards the end of the series, as you may recall, Lakshmi, Mary, the eldest daughter, she
Yes.
becomes an age, and you see
Yes. He becomes an agent.
the word estate
Yeah.
essentially meant a large plot of duchy, which some aristocratic English families owned. Parts of it was lent to
Yeah.
farmers. They plowed it,
Yeah.
and parts of it was lent to farmers, rearers, had an hospital, cottages, all on this piece of land, which actually belonged to the aristocrat,
To the
the
Earl.
duke,
Yeah.
or the lord of the
The
manor,
Earl.
whoever he.
Yeah.
So this is how formal it is. The term real estate agent actually comes from the agent who let out these little parcels of land to various kinds of people, making sure that the duchy was fully financial. So in here, it's far more formal approach. So even when I studied property valuation, we had the modern techniques of using NPVs and IRRs, which was very building computer and macro models in Excel, and it went back all the way to like doing NPVs through like a thick book where you actually went back to a year, marked out the value, got a figure, added wealth a certain number to get the value for today. So there were these formal techniques which were not present back in India even till about 10, 12 years ago. So I'll say the market is highly regulated, um, highly transparent. I can go onto the council website and exactly find out the registered value of a property.
Mm.
So those things, I think it will take a while, maybe a generation before we come to that level of transparency. But nevertheless, both the countries, both the places view it as an asset class worth investing in, and I think that's what matters.
Thank you.
No problem.
Students, any questions?
They're scratching their heads,
Yeah.
thinking, oh my God, she's told us to ask questions. I wasn't even listening.
Are Chaitali?
Yeah, hi, Namrata.
Hi. Knowing both the markets, to bata ki where should one invest? Matlab in a regulated market, how well would a property grow in terms of investment, and in an unregulated market like in developing countries? If you want to make money, where is it better to invest in real estate? In like if only ready reckoners ready reckoner is the value that you get in developed nations, then wouldn't it make more sense to invest in a developing country and make more money out of it, resale value? And if someone wants to get into the business of real estate, so what do you recommend that way? Knowing both the
There,
reasons,
there
you
were
would.
there were two there were two parts to your question. Firstly, you said how should one make money? I say
Uh-huh.
just give it out to the world, money comes back to you. So send it to your friends like myself. I'm happy to take it. No, but on a more serious note, see, Namrita, what happens is both the developing and the developed and the developing world have very two different kind of returns.
Mhm.
So developing world, as you correctly pointed, will have a higher. So return in investment is split into two. One is rental return or the income return on the property, which is called rent effectively, and there's the other part is the capital gains.
Yeah.
So what and these two are the big factors determining how you want to play around in your property portfolio. So big
Mhm.
companies like, for example, Aviva Life or
Mm.
JP Morgan, they
Mm.
obviously invest in everything because what happens is when I say don't keep all your eggs in one basket, that's what I meant. When you if your aim is to make 15% return on your portfolio, you need to invest a little here, little there, and little everywhere. But yes, there are two distinct returns you get. In a developing market, you get very high capital gains because
But
things
then
are
there is
changing.
always risk of speculation and it going up
Yeah,
and
a lot of
down.
speculation, a lot of black money. Things are rapidly changing. Urban design is rapidly changing. Tomorrow you
Yeah.
have a new swanky mall somewhere next to you. The prices suddenly go up.
Yeah.
Land use was agricultural before. Suddenly it's commercial. You get too much. Capital
Something
gains
right
is
and everything
extremely
goes
high.
down.
Yeah,
Yeah.
which things are obviously a lot of external factors, not
Yeah.
factors under your control. But yeah,
Yeah.
but if you do want capital gains is your play, then great. But if you looking at the rental income, which is like your constant source of income, it's
Got it.
negligible in
It's
developing
yeah.
countries and
Yes. I
extremely
agree.
high in
Yeah.
developed
Yeah.
countries.
Yeah.
To the
Yeah.
extent, if some people here buy a house and they end up paying less mortgage than they paid rent. So that's how high the rents are. You're looking
Yeah.
at a central London yield to be nowhere less than, and when I say yield, these are technical terms. Yield is actually your income divided by your capital value, and that is nothing less than 12 to 15%, which is very high numbers in these part of the world where 6% is a constant. So it depends. If you are looking to flip, then
Yeah.
maybe developing is the place. But then again, with developing markets, the problem is lack of regulation, lack of transparency. You will never realize the actual value of your property. You can
Yeah.
come to a point where you will only get, so if you want to sell a distress, and say for example bank takes it from you because you could not pay the loan or whatever, you will only get like 5 lakhs for a 50 lakhs property because that's your registered value. So that
Yeah.
makes it
Yeah.
extremely difficult when it comes to people dying and property being passed on as heritage. A lot of times it is very difficult because these registered values have not changed since 1950s, and that makes it a huge deterrent for a lot of people to actually invest in development.
Yeah.
Whereas when you come to developed countries, yes, your capital values don't change that much. Nobody's going to pay 50 lakhs
Yeah.
for a
Yeah.
file for something that's registered for a 5 lakh. things don't change that quickly because land use patterns are defined. Urban design and urban developments and urban plannings are put in place for 10 years, 20 years ahead. So the development and growth is slow because that's a sustained model
The
of
entire
growth.
inflation thing is very much in control. The entire in every market actually.
Yeah, single. So, like I know from colleagues who work back in India, the salary effectively increased, like in corporate sector, by at least a double digit. If you don't get a 10 to 15% raise, it's not a raise. Whereas if you get a 10 to 15% raise here, it's a promotion.
It's
It's like
huge. I know. I am.
so because all you really need to do is beat inflation here with your salary raise, which is what happens. So I think there are two different perspectives, and invest both.
Yeah.
And I mean not just invest outside your country, even within your country you can choose some riskier investment. Risk is directly proportional to return. So you can have
Like like
riskier
like
investments, low risk, high return. That never happens. High risk, high return, low risk, low return. So
like a
you can
combination
balance your portfolio.
of fixed deposits and shares. Similar to that. Yeah. So you have some fixed deposits as your security,
Something on those lines.
and mutual funds or shares you take that risk and try to grow with that.
So it's something similar, but then you're playing still in the pool of the virtual. What
Yeah.
I mean to say is if you want to
Yeah.
really have a balanced portfolio, then go across all asset classes. And when it comes to particularly looking at real estate, then also look at risk versus return profiling of. So I mean, when you do these profiling, you build models around it and you look at values and things like that, which I don't want to confuse people with. So yeah.
Like because of Abhijit, I'm quite in tune with these things. He's majors in finance.
MBA student would, an average MBA student would actually learn finance.
Yeah.
I think one should just know as part of growing up a little bit of finance, which I think in Indian
Yes.
education system we fail to deliver
Yeah,
in
yeah.
some ways.
But a lot of colleges are now including it. At least in all post graduations, most of the post graduations, it is a part of municipal finance was a part
At
of our
least at
course.
postgraduate level, agreed. At postgraduate level, there should be
Yeah,
an
but
impetus on those
initially,
things.
during graduation only, I wish we had studied some part of it in our graduation also. It would have helped
Yeah, would have been
building
great.
a better perspective. Yeah. I think तेरी मेरी बातें चलती रहेंगी. I'll थोड़ा सा mute myself and let others talk.
Great.
Any more questions, students? I think we should ask Chaitali how she has done investment so we can follow the same thing.
Trust me, I'm not. So see, one thing about money, if you have heard this Jay-Z song, and I don't want to use French words here, is like, once I had 1 billion, then that shit became 2 billion, and then 4 billion, and then he keeps talking about how he wants to give it to his children, and so money makes money. First, I need to earn some to be able to make some.
Yeah.
So I think I'm stage where I'm trying to make some. No different in age than you guys. So you all know where we are with families and things like that.
Students, do you have any questions?
हेलो मैम.
Hello, who's that?
हाँ मैम, रोशन इज हियर मैम.
Yeah.
हाँ
Hi, Roshan.
मैम, रियल एस्टेट कंट्री के जीडीपी में क्या रोल प्ले करता है और कैसे अपन इंक्रीज कर सकते हैं उसको, ऐसा मतलब क्वेश्चन है.
See, real estate obviously forms the basis for any country's GDP growth because it's a cyclical nature of there is the nature of investment is cyclical. What happens is you buy a house for 20,000 to 20 lakhs today. 10 years down the line, it will increase to 40. And the mortgage you pay on it goes into the bank, and that interest that you pay on it again is used for things. The taxes you pay on it goes for road improvement. So it's when you buy the हाउस जैसे मगर पुराण पढ़ो तो लिखा होता है कि राजा ने ना रंक को गाय दी, क्यों दी? क्योंकि गाय से डंक मिलता था, गाय प्लाव भी कर देती थी लैंड को और गाय दूध भी देती थी. तो बेसिकली यू गेव लाइवलीहुड टू अ पर्सन बाय डोनेटिंग अ काउ. सो रियल एस्टेट इज एग्जैक्टली लाइक अ काउ in the modern parlance, because when you start paying mortgage on it and taxes on it, there are other wider implications in larger economy. It's again, as I said, I didn't wanted to touch upon its implications locally, nationally, globally, because this is like another topic. You have to start at the basis of understanding real estate economics, um, and how they play their part. But think of, just to answer your question, think of um, real estate as the cow, which yields you dung, which gives you food, which gives you milk, which also plows your land, and effectively gives you a livelihood. So when you start defining the basis of it, so why does American system encourages home buying so much? Why did you think the subprime crisis happened, the global economic? Because there is an impetus, uh, there's an impetus on buying houses and paying mortgage. And there's always that baseline to it that if there is a certain kind of house or certain kind of people, the middle class will essentially keep pumping back into the society through buying assets. And that's what they encourage. And that's why there happens a global credit crunch, because there is no more credit to take from banks. Uh, but but yes, it has a um, huge part to play, I'll say, because it leads to other things. Obviously, that's a separate question, but for your purposes, understand that like a cow, and you'll get the picture. Anybody
Thank you,
else?
ma'am.
No problem, Roshan.
Any more questions? Should we formally close the session if there are no more questions? Okay. I would like to thank Chaitali for such a knowledgeable insight and telling us the real and virtual investment portfolios, and would also like to thank the students for participating and the staff who have joined the session. And Kapil sir, कुछ बोलना है?
Yeah, yeah.
Okay.
मैम आप ये कर लो, थैंक्स कर लो, बाद में मैं क्वेश्चन पूछ लेता हूँ. बोल दो जी पहले.
No, go for it. Like I'd rather have your question before I
Yeah,
close
it's
out.
fine.
I have a
Yeah,
couple.
yeah.
Sorry, but I only have a couple of minutes. Childcare duties. My husband needs to sit down to work, so I have
Yeah. No.
take
How
over.
does
But yeah,
this?
please go ahead. Please go ahead.
Yeah. How does this real estate policy works when you reclaim the land?
Wait, what do you mean reclaim?
Reclaim. मुंबई में
Like
reclamation होता है.
actually like Mumbai reclamation kind of thing. See,
हाँ.
reclamation only happens only. What kind of policy you mean? Like land use policy?
No, maybe for any purpose, but at the end of the day, we are utilizing it for certain purpose, right? Whether it may be housing, whether it may be a playground or anything. But
Yeah.
when
So
you
that
reclaim the land,
you reclaim the land, it comes with a purpose. It exists. You're reclaiming it from the ocean. So when you
yes,
look into the policy aspect, it's only sanctioned with a purpose. तो अगर पता है कि बॉम्बे को घर और चाहिए और उसके लिए अपन रिक्लेम कर रहे हैं, तो that is land use. The land use is decided pre-reclamation. Otherwise, nobody is going to give you permission to reclaim land,
yeah, but how do you decide
because
the
there are
rates?
ecological implications of something.
How
I mean,
how
in
is the
India, you
revision
can do
is
anything. I think people can create islands out of nowhere, but in other countries, you can't. So the purpose, land use purpose and function is predetermined via policy intervention, and obviously looking at lots of real estate economics and statistical data, which tells you values, usage, demand, how to. So there is a concept of equilibrium creation in real estate economics, where you try to equalize rentals, you try to equalize ownership in a way that it comes to the closest. That means, which ideally never happens, but this is an ideal scenario where you're buying mortgage and your rent is exactly the same. It never happens. But it's a state economists or policymakers strive toward. Now, when you have a situation like reclamation, it's a dire need to create a certain kind. So if you want allowed, so that policy is put in place. So that's the best I can tell you about it. If you have further questions, we can take it offline. But thank you, everyone. Thanks a lot. This was really interesting. Thank you for making time. I could not be, as I said, I'm not an admission. I'm here on the account of my friends. Thank you so much for inviting me, both Namrata and Radha. And it was great interacting with you all, because even if something that I know can be shared, more than happy to. And if you have any further questions about careers or anything like that, you can take my email address from Radha and we can take it up. Thank you, guys. Thanks a lot.
Thanks a lot, Chaitali. Enjoyed your session. Full knowledge you have shared with us. Thank you. So, shall we end the session?
All right. Great seeing you guys.
Okay.
Thank you so much.
And we'll
Cheers.
be disturbing you again and again for some time in between. चलो
आई थिंक उसका डिस्कनेक्ट हो गया.
हाँ
हाँ,
ठीक है, शायद उसको काम में मतलब बहुत बिजी है वो.
हाँ.
वह 9 बजे का लेक्चर में, तो ठीक है, चलेगा. चलो देन बाय.
ओके बाय.
Bye bye. Bye. है क्या कोई कि गए सब लोग?
दादा जेवायला ये.
क्या आपले झालेले?
हा
झालंय.